Okay, let's do one more example of a ranging market here. Again, we have a ranging market, and this is all at separate times in the market, guys. We're not just cherry picking examples. I'm just scrolling back and forward through the charts and having a look at specific setups. As the market's moving sideways here, we could pick up a few things. Like, for instance, you might say, oh, there's a pin bar and there's a pin bar, and you might be right, there are pins, but they're very small pins. And remember, we like the pin to be a lot longer than that. This is a very small pin and not a very strong signal whatsoever. Whereas if we look at this pin bar right here, now that is a good strong pin bar. Nice long pin, short handle, that's what we want. So you see a signal like that, we're looking to trade off that sort of a pin bar with a confirmation obviously of the MACD. Now we use the MACD obviously a lot in the ranging markets, not so much in a trending market because the market's trending. But in a ranging market we need a confirmation, so we use the MACD for that, as you saw in the earlier videos. So let's get back to this pin bar. So the pin bar there sets itself up. It closes and it confirms that it's a pin bar. So what do? Well, we take our entry again, just a little bit higher than the pin bar. That's where we get in. We would have been triggered on this trade. This bar right here would have triggered us into a long trade, given us a bit of profit, taken it back again. But notice it would never even made it halfway. And when we put our stops in, we put them in just below the pin bar. So this trade would have been safe all the way up, all through this time, right up to when it gave us profit against the top of the range. And obviously a safe range trader will take his profit off the table there, and we don't take off half and let it run and all that nonsense. If you're range trading, if you know you're in a range, take your profit off the table when you hit the range. It's most likely going to come back down to the other side. You don't want to get stopped out at break even. So there it is, another setup. Now you'll notice through the videos that we focus a lot on the pin bars in a ranging markets because they're the strongest signal. There are other patterns that develop in a ranging market, like a double top with a lower close. If you can see here, double top, lower close, but they don't work as often as a pin bar does, and so we prefer to take the prime setups. We prefer to take the most profitable ones, and so that's what we do. We focus on pin bars and we look for the best pin bars, and those are the ones that we trade for profitable trades.